All right, guys, good morning. Good morning. Welcome aboard to the Morning Note. My name is Carlos Garcia. I'm the founder and CEO of Gar Capital. It is Tuesday, August 29th, 2023. Glad to have you on board. Yes, it's been a rather quiet week so far to start the week, but we are here working for y'all, keep you guys informed regardless of how slow or busy it is. It's still important stuff to go over the market. With that being said, you're staring at right now the market blog on Discord. We'd love to have you on board. Link is in the description below. Good morning. Dow futures are down 35 points this morning. NASDAQ down about 20. S&P down about 2.5. Russell down about 0.18% at 1870. That's small caps. Yields going a little higher, 4.232% this morning. Dollar index 104.25 this morning. That's up 15.17 for the volatility index. The VIX up 0.66%. Not exactly a ton of fear out there. Crude oil is above 80.28 a barrel. Gasoline futures really tanked yesterday, $2.54, as we're getting away from the summer driving season. So obviously with the stuff in China, the stuff happening in terms of economic policy over there, economic slowdown, that's going to bring down demand for crude oil and gasoline as well. So we're going to keep an eye, obviously, on commodities as we go, because the dollar, as we know, are pretty important with that. Gold futures down 0.11%. Silver futures is 2468.33%. Copper futures $3.79, up 0.08%. Let's go to Forex land, 107.93. I had my eye on the 108.25 level for euro dollar. I didn't tell anyone on that because I didn't think we were going to break as of yet. So I wanted to get that break alert first on the euro dollar. It rejected. We're now at 107.93. So basically like down 28 pips. I did not feel that. Again, I was just looking at the technicals. I can look at that with you guys. Forex was pretty quiet other than dollar yen for the most part, which is continuing to go higher. 147.13. Remember the BOJ's intervention level. I just want to quote that because that's what they said. Intervention level is at 150. So could we be getting to 150 before we get a slam? Seems a little telegraphed, a little too easy to just go long here. That's kind of that risk I'm looking at, and like, oh, if everyone's long at this very moment, it may be a little too crowded. 125.76 down 25 pips for pound dollar this morning. Bitcoin up 0.13%, 26,125. Ethereum 1647 down about 0.15%. Had a headline here on Bitcoin. Bitcoin trading volume is at its lowest in more than 4 years. Man, that's 2019, pre-pandemic. So Bitcoin not getting a lot of love doesn't mean it's going to tank. It just means that people are not interested at this moment. And you would think Bitcoin being one of the most biggest gaining assets in, I guess, in the history of economics, in my opinion, or in trading, it just no real demand for it at this moment. Best Buy had their earnings. They beat $1.22 above $1.07 revenue, 9.58 billion, estimated 9.53 billion. Fiscal year $6 to $6.40. That's their guidance. They beat revenue. Also, fiscal year guidance was a little weaker. Well, it wasn't in line, but to the weaker side. Comp sales 4.5 negative to -6. So again, a little bit of a miss in terms of comps. NEO missed their estimate, 45 cents negative EPS versus the negative 36 cents. Sales were 1.21 billion. The miss is 1.35 billion on NEO. NEO at this point, you're really just looking to trade the stock, not really the company. I was reading that their profit margins, gross profit margins, are 1%. Yes, that is 1% margins. That means for every time they, I assume, build a car, they're losing money. And then you mix that what's going on with China, not the best scenario right now in terms of Chinese stocks, even though some are catching bids this morning. This is from Citi. Citi sees better days for telecom upgrades. Verizon and AT&T. AT&T Verizon are rather cheap, but they are cheap for a reason. So really the only reason you want to own it is for a dividend that's costing them tons of money. Let's go and take a look at it rather quickly. Let's go and bring up here. We're going to go to T stock. This is AT&T stock, and look at the yield, 7.81%. Now again, that does sound nice. That does sound like, wow, that's a pretty great yield. I'm not getting that anywhere else. But keep in mind that you can get those kind of dividend creeps, kind of those dividend, kind of the way to kind of sneak you in there. AT&T forward PE multiples at $5.85. The only thing I don't like about AT&T is their debt load. And again, I don't know how much of that debt is really tied to the 10-year or just corporate bonds. So again, I don't know when they're going to refinance. Obviously, they have cash flow. We know that. Free cash flow, let me see here. Price to free cash flow yield is 5.68%. EPS down this year 139%. This is from FinViz. So let me go ahead and bring that up. We're going to talk a little AT&T this morning. AT&T, you can see gross margins about 60. That's a lot better than NEO, obviously. If you look down at the chart here, really on a daily chart, it is breaking out of this downward trend. You want to take a stab at AT&T and make 7.69% dividend? Man, I can't say that's a horrible move. And the only reason is you're really dumpster diving. So again, you're really buying a stock here when no one really wants it. Look at Verizon as well. Verizon, I think AT&T is a little better setup. You're just still within a downward channel on Verizon, as you can see here in FinViz. 4P multiple is a little higher than AT&T. Yield is slightly higher as well. So kind of pick your poison here, but you see 39 to 40. That was the price upgrade, a whole dollar by Citibank. Thanks for the bullish call. But hey, you know, AT&T, as long as they pay that yield, right? You know, not terrible. Kind of throw in a couple of bucks and made 7.81% if they can actually pay it. Let's take a look at the daily here on AT&T. We'll go to the daily. You could see trading at a 45 RSI, not exactly oversold, but you could see on the weekly. Wow, my goodness. Last time that we got to this level, we bounced slightly. So you're still in a downward trend. We need to make sure that we get somewhere out of this trend before, you know, hey, maybe AT&T is worth a stab. Again, on the cheap side here, let's go to Max. And you're talking about levels not seen since 1996 on AT&T if we get to $11.89. If you're talking about support levels, it's really hard to find because we keep slicing it. So AT&T, let's place some alerts where maybe we could take a little crack at it and go long. Let's go to above 1552. We don't have to hit the bottom perfectly. We don't have to do that. Again, we'll see if we catch some buyers. Maybe they turn around. So I'm placed my alert, $15 stock. If we get above that, we'll take a look at AT&T and see if we can sneak in a little bit of a 7.6% yield. That's not a bad deal. That's almost double, or I want to say, is it double? No, a little less than double the 10-year rate. So, and they have been paying. They're a dividend aristocrat. Can't really get too upset at them. All right, let's answer some questions. Good morning, Carlos. The stress of my trading has gone away since I've been with the signals. I trust you and your team and trust your trading plan. Fist bump, man. Awesome. I'm glad that you're feeling better with that. I mean, this is an endeavor that isn't easy for everybody. Just like anything else, with practice, you get better. You know, the human mind finds ways to make tasks more efficient. And the more you practice a task, I don't care what it is, you're going to get better. I think the issue is expectations. Expectations are a problem, especially in a social media world with Lamborghinis and cash and yachts and all that good stuff. What's really about trading is nothing to do with cars, nothing to do with flash. It's all about the nitty-gritty right here in front of you. Looking at your charts, reading your research, getting up in the morning, reading those price upgrades, seeing where the next opportunities are, reading books. That's the flex. The flex to me is how can you help others? That's the flex. How many books are in your bookcase? That's the flex. I don't care about a car. This is what's important. This is what brings success. So the expectations of, oh, let's get rich quickly, we don't push that narrative. What we push is that let's help you build the skills so you can fish your way. Now, if you want to fish your way to millions of dollars because you want to risk it all, you could do that. Or if you want to do this consistently over time where it becomes a skill that you can pick up at any moment, I mean, why not? I think that's the better setup for you guys. You want consistency over time. Anyone can win the lotto, right? But again, consistent income through trading is possible. Absolutely. If you get the skills and the habits down, then you're going to be more efficient and you're going to be smarter for it. Just block out the noise, focus on the important stuff, and keep those expectations in line of really your situation. Obviously, if you have millions of dollars in the bank, it's not going to be that hard to make more money. But if you're trading with a small account, $2,000, $3,000 or so, for example, this idea that you're going to double within a day, that doesn't exist, and you're going to blow out your portfolio. So don't do that. Earn your way to trade higher amounts. That's the best way. Earn that way. If you can't trade $1,000, you'll never be able to trade 10,000. Can't trade 10,000, you're definitely never going to be managing 100,000, and so on and so forth. Treat the capital you have now as your hard-earned capital to get better over time. Best advice I can give you for anyone that's getting into trading but still kind of in that lost eyes in the stars that, oh yeah, I'm going to be a millionaire trading. I got 8 screens. I'm ready to go. It's the reading that makes a difference, guys. Sorry about that. Again, that tangent. Let's answer. Bitcoin, answer questions. Bitcoin just follows the Dow. Not exactly. Not one for one anyways. But here's my question to those talking about Bitcoin. Would you buy here? Probably not. I mean, unless you already have. Unless your dollar cost averaging, like me over time, 26,000 isn't exactly a place that you want to go ahead and say, ooh, this is on sale. Sure, it's on sale from where it used to be, but it's not enticing enough. We're not there yet. If we get to 20K, that's where it gets interesting. Look at the daily. We haven't even tapped the 200-day. We are holding on above that. So if we get above 25, maybe that catches some bids in the market. I just don't think we have enough buyers to be enticed by this current sell price. That's it. It's a really crappy volume out there. It's a fact. Good morning, Carlos. Thoughts on SpyG? Do you think $55 this year want to upload? If you want to reload, upload, reload. 55, ooh, we need a lot of bad things to happen. That would be a great level if we did hit it. I don't think we get there. I think at worst we get to 58. That's your 100-day. Would that be a place to reload? Hey, we've held that 100-day since March. Not a bad spot. So place an alert there at 58.94 on S&P Growth ETF. Good old SpyG. And guess what SpyG has in there? NVIDIA. Good morning, Carlos. Thoughts on Boeing trade? Yeah, let's go and take a look at it. This morning we are long Boeing, the only trade we have open. You can see that right now we're about 54 cents off yesterday's close. We're going to take a look here at the hourly. I've been giving everyone the play-by-play on the watches and charts. So here you go on the Discord. Check this out. Since obviously, we're keeping an eye on everything. So again, I put up a couple of charts, gave everyone updates as we went along just to keep everyone up to date what's expected for the stock. So we closed at the higher end of the range. Once we break to 227.68, we had a ton of volume on the 230s. Our target really around the 229, 223 zone. Really what I want to make up, guys, take a look at this. And I drew this on the iPad, which is so slick because I have the pencil. The target zone is right here, 227.68 for that break. That 230 zone, that's our target. This was earlier yesterday, and you see that pullback. Again, this is a 30-minute chart. You can see that possible double top that we broke out of. Again, you really just want to hold that level of around 225 or so. And we are about $1.35 above it. No ground grades, no updates, nothing in terms of news for Boeing today. Nothing specific. Your main support is right around 220, as we've been speaking of. So I think you guys like these charts. Kind of looks kind of funny, kind of like teleprompter in football. Hey, you go left, you go right, kind of Madden back in the day. Didn't get a bunch of emojis, but you guys are probably chilling. I'll make more of these charts to kind of do a little more explanation, since maybe you guys are a little more visual learners. But again, observations on Boeing yesterday. Still trading pretty choppy. Still in the green for the session. This was yesterday at 257. The stock market was holding up. 227.68 is the level we're breaking through. And again, we wanted a power hour. We did. We wanted a gap up today. We did not. So kind of just holding up, knocking on the door. I think we get it today, to be honest. I think we get that push to 229.23. We rock it and we call it a day. So let's see if the market can push a little higher to give us a little love, since S&P is kind of just chopping. Sucks. Thoughts on the announcement of Disney dividends? Well, it just shows that they have some money. At least that's good news. The only Disney news I want to hear is, did they sell ESPN? Because that is so expensive and it's such a drain on their balance sheet. So a dividend's nice, but again, who cares about a dividend? Remember, we can get over 4% in online savings. AT&T's dividend, different story. That's a higher yield. But in terms of Disney, they're not going to be anything above 2% in terms of their dividends. So, I mean, maybe that's a way to gain confidence. I'd prefer that they bought back shares. That's just me. Let's take a look at the dollar together. All right, dollar is, guess where? Overbought on the daily. I expect us to reject. If we continue higher, if we break 104.50, then 104.99 is definitely in play. I just don't see it here. Well, we could be a little more overbought, obviously. 114.77 was the last time we were at the most overbought place in terms of RSI. And that was in September of 23, pretty close to a year from now, a year ago. So let's see in August, see September 2nd, we were at what, 111, and we were overbought as well. Got back down, bounced up, and then just absolutely crushed even into the third quarter, even into the lows of October in the S&P. Interesting. So what we want to see is, does the dollar hold above 104.50 if it can break? It is above the 200. We haven't golden crossed yet. The yellow level is the 50. But we're seeing the 20-day starting to crack above the 200, maybe getting some more momentum on the dollar. And again, a lot of this, guys, on the dollar is a lot of China stuff, man. In terms of the globe, where else do you want to be? The United States is still the best economy on planet Earth in terms of the majors. The Chinese yuan is getting fixed pretty much daily. That's going to add pressure on the dollar to keep going higher. Good for us if we're traveling overseas. But again, not the best in terms of assets priced into dollars. Thoughts on long-term options like a year until expiry? Just depends on what you're looking for. If it's a hedge, that's fine. I remember I bought Amazon puts, I think a month and a half ago. It was for a year out. I think it was like the 115s. It had tons of volume, 75,000 in volume. And that thing just slowly dithered away. I took it for minus 50 because Amazon held up across the board. So long-term options, you can in terms of hedging, but in terms of what we're trying to do as a day trader, no, because we're trying to catch momentum. We're not trading companies. We're trading pieces of paper. We're trading stocks based on price imbalances and fluctuations. That's it. I think that if you're doing long-term options, that could be a little more of a investment type thing. You could just buy the stock instead. I don't hate it in terms of long-term options. I just think that it's just too pricey for what we're trying to achieve, at least here day trading. Let's see. Thoughts on CTRA? I don't know what that is. CTRA, let's see it. Coterra Energy, so an energy company again. First thing I see energy, that means chop. Not much going on. I mean, I don't know much about Coterra Energy. The energy companies that I like ExxonMobil and Chevron, the big boys. I think those are the ones that have the balance sheets. They're the ones that are going to stand the test of time. But smaller aggressive oil companies, again, I don't know if this is one of them. They're usually takeover targets. They just get bought out. So yes, there is some explosive opportunities in energy names that are, drillers, small time players. They get bought up by the big boys. I don't know much about Coterra Energy, but I can tell you, you are in a golden cross. So expect higher rates, higher stock prices here, at least over the longer term. The 50 above the 200 on the daily, you're probably going to get to 32, maybe extend it to 36.55. I would say it's a buy just on technicals because you're above, you have that golden cross there. And if it was a death cross, I'd probably say sell it. But again, we're not there. Golden cross, CTRA is going to go higher. Again, based on pure technicals. If you like SPY-G or SH Schwab growth long term, they're both the same. It's like saying, do you like Pepsi or Coke? I'm a little more a Coca-Cola guy, but there's some people who like Pepsi. It's the same sugar water. Same deal. Thoughts on Roblox and BABA? Roblox, ugly. Good news, there's a gap to fill the upside. We're waiting for 33.70, at least on the technical basis. 21 will get you to where? That is the lows from September, or is it April? So let's see if we can put an alert. 21.65, and then we'll take a stab at it, if anything. Worst case, we could take a stab on Roblox. Maybe someone buys them. Hey, no one thought that anyone would buy Activision Blizzard. Microsoft came calling. Why not? Why not Facebook or Metaverse buy Roblox and integrate their Metaverse? Hey, you're buying it at a place that's pretty cheap now. I mean, obviously, I got to look at the PE multiples. But with growth stocks, PE multiples are rather redundant. We know they're expensive. That's the deal. So is it the best market environment for a Roblox right now? No, not with higher rates. Kind of hard to attract buyers for their stock. But again, the stock and the company are two different things. Now we're looking at an opportunity that, hey, maybe Roblox gets bought. Who knows? An integration with Metaverse, an integration with Apple would be nice. But we don't know if that's the case. All we can do is play technicals, especially in this kind of volume tape. 2165, if it breaks below that, hey, we could treat it like AT&T where we take a couple of stabs at it. And if it goes down a little more, then it goes down more. Thoughts on Peloton, Amazon, or Apple purchasing it? That's a little different because when I think of Peloton, and again, if we're just equating the stock and the company, the assumption is that they probably have bikes and treadmills sitting in their warehouse collecting dust. So it's not just a a studio company that it's easily absorbed. This is not a movie company, for example. Now you have hardware. Now you have all these exercise bikes and treadmills that they got to liquidate or get rid of. I don't know if Amazon's going to want to do that. They got their own inventory. Would Apple really want to carry more inventory? That's more overhead. Probably not. So I would say the next shoe to drop for Peloton would be that less production of their bikes and equipment, which is their moneymaker, obviously higher yielding, but more into the videos, more of the on-demand content, subscription based. A Netflix sounds like a better idea than an Apple who has their health service. Amazon, I don't know if they have anything around that. So again, that's all assumptions. We don't know what these companies want to do. I just think Peloton is a harder sell to a board of directors who want to expand than, let's say, Roblox. I think Roblox is probably your better bet. And again, they have more daily active users than Peloton itself. I own ELF stocks since October 22. I'm looking a way to buy the option into October earnings. ELF Beauty. Wow, what a chart. Well, it depends what you're looking for. You're looking to buy an option into October earnings, so I assume you want to hedge your position. You want to make sure that, hey, man, if we get nuked, I'm protected. You're probably looking at the level here of 86.76. That's a gap to fill to the downside. We filled this gap here just recently, which was August 16th with a nice bounce. So you had your earnings report, pull back, push higher, and then pulled back. But as long as it's holding the 50-day, it's been kind of holding that 50-day range really since, 2022. So if you want to buy a little insurance on it for the options, I would wait until you get closer to the actual earnings date. I don't know when that is. You said in November. So I would say revisit in November, see where the stock is. You could always buy insurance on it. Again, you won't buy car insurance hoping your car crashes. You're buying car insurance hoping you don't need it. So again, if you're buying this option, you're really hoping it doesn't pay off. That doesn't fit the narrative in terms of day trading, but again, it is good insurance. I know we went a little longer than usual, guys. My apologies again. Have a great rest of your morning. A lot of great stuff we went over. Thank you for being with me, even on a slow, quiet tape. There's still more to learn. There's still more to go over. Just because there's nothing to do doesn't mean there's nothing to do. You can always get better every day, no matter how slow it is, no matter the market condition. Read that extra page. Do one more piece of charting, one more piece of analysis. That makes a difference over time. Have a great rest of your morning. We'll see you guys tomorrow. Cheers.